Techies and scientists, welcome to the channel. I just want to do a quick video about how to trade the 1 hour to your advantage, especially when you have an all-time high. So last week we had an all-time high all the way 25, 570, 75, as you can see on the chart here. And sometimes especially when you're trading like this, you're looking at this, right? So it's easy for you to say, or for a trader to say, okay, this is the range, this is this to this price, which is lower. I can use these levels here to see if price is going to get, okay, to the 25% or to the 50% and how much is going to stay up. And you can kind of have like a gauge, just like, driving your car. You have the gauge. The gauge doesn't do the work. It's the engine, it's the oil, the tires, and then the steering wheel, and then everything that goes under the hood that does all the work. The Fibonacci is not the magic. It's you use it as a calibration to see where you are, and then to see whether if you should engage price or not. So it's not the end all be all. But when you have a range like this on the daily, it's very easy to see, okay, what can I do where I'm at? Okay, I'm gonna take a chance of a risk to enter here, and I'm expecting price to go to this level. It's a little bit easier to follow and to have a little bit more confidence. But once price break above 25,394, what can you do? This is where you kind of get into a dilemma. Is it going to retrace lower? Is it going back up? I mean, especially if it's not going on the trend. If it's on the trend, it keeps going higher and higher, then you can take a risk and then put a trade in. But if it's just sitting on the side like this, it keep going back and forth, this is where you can grind your account down. This is where you can grind your frustration. I know it did for me in the past. So what I think will may alleviate some of the pain is what I can kind of like show you right here. So if you take a look here, so I break it down into the 4 hour, and what you can use, especially if you wake up early in the morning and then you're like, you know what, I don't know what's going on, and there's no other, I mean, there are no other indication here. There's nothing on the left that can tell you what you can do. So the next best thing to do is take it down a notch, take it down to the next lowest level, and then so you can kind of like use your Fibonacci to see what price it may end up doing next. So the next thing to do here is to use that 4 hour, and then you place your Fibonacci here, and then try to see how prices behave. But just doing this like this, you don't see it, you don't get it, it doesn't make sense. So let's drop it to 1 hour. And once you drop it to 1 hour, what do you see? You see that the 1 hour and the 4 hour closely related with each other. And then you start seeing some movement, right? So you see that, oh, okay, so price went up, make a new high here, went back lower, and then almost made a high, but it did not. And then the next hour it opened like around noon, made a new high, and then open up here, make a slightly lower high, and then make a new high over here, and then start going back lower and lower. So you kind of like see around how it's navigating around that Fibonacci for the 4 hour or the 1 hour, and then you kind of like make your adjustment just like this. And we're just gonna keep going down the ladder. So you take it down to the 15 minutes, and it's right here. If you keep the same Fibonacci, you start seeing, okay, what price movement is doing. Quickly, you can see there was a low made here at around 845, and there's the price, and then it went up here, and then it never came down until market open at 9:30, wick down. But all the bodies, as you can see, they all stay above that 4 hour or that 1 hour Fibonacci that I put, and price keep grinding up and up and up and down. So I can place a Fibonacci for 1 hour for what went up here. Let's see, and I will probably do that in a little bit. But before we do that, let's just drop into the 1 minute, and then you'll start seeing some of the magic, right? Where it is, it's taking some time to render, and there we are. So this is that same Fibonacci that I put for the 4 hour, take it down to a 1 hour. What do you end up seeing? Now you start seeing some definitions. Price went up, went down. What you saw was just the bodies in the 15 minutes. Now you start seeing some candles going below the Fibonacci and then get up to that 50% and then drop. Like, oh, okay. Um, but it didn't drop all the way down, so it keep going back up and made and then break above this level here. Let's make it closer so you can see. And price just get right above that and keep going sideways and then go lower. So at this point, what do you do if you're looking at price like this? You see that it did not return into the bottom here of the Fibonacci. There's a high probability that price is still bullish. And then you can use that Fibonacci to navigate your way around price. So if price return into that 25% of the Fibonacci, you can say, okay, I'm gonna make a decision, try to see if I can go long from 25,474 all the way until 25,539. See how we go. So let's see. And bam. So we got real close. We got really close to it. And so which is why sometimes I say you take a partial along the way and then you throw your stop loss. Because now when price start going down like this rapidly, you'll be able to keep some of your profit. And they keep going back lower and lower. And again, I want to point out that sometimes um, when price make a low between, let's say, the 19 minutes after the hour and 33 minutes after the hour, usually if it doesn't make that new high here, price is going to come back and hit that low again at some point. So this is something to keep in mind. And don't take my word for it. Go into your chart and then you'll see this pattern happens all the time. And then this is part of the combo breaker model. It's going on the script and then you're thinking it's gonna get higher and then it failed to get a new high. And then if you had your stop loss all the way here and then it triggers it, bam, and then you're out of the game. Which is why it's always good to take a partial. And then once it makes that new low here, look at the bodies in the candle right around it. See, respect that low and then keep making that high and then grinding higher at this point here. Because there is a high and a lower high here, definitively within that macro time between 10:40, 10:50 and 11:15, you can use this area of opportunity to go long here. Okay, so as you can see, price keep going higher and higher until they reach at some point made a new high and then stop going lower and lower. So you can see how even though you did not have any previous data for in previous days, you can still use the 4 hour and the 1 hour to navigate your way around this price going on consolidation. And then this is just a quick scalping. So let's take that one out, put it back to 1 hour, and then we're gonna move it to the top for the next hour. And then you can keep doing this all the way hour by hour. So where's that wick before? And he gets you to these levels here. So now, and that was the 8 a.m. long wick here. We're after the CPI news. And then there's this next long wick that we use. So this is the 1 hour. We're gonna take it down all the way till 1 minute. And then to see how price respected those levels. So yeah, so that was our 10 a.m. wick on top here. So anytime after 10 a.m., you can try to gauge to see where price is going and after that. Because the 11 a.m. opened up here at the bottom and it started going up. So when you take it down, because at around 9 a.m., you don't see that print here. From 9 a.m. until 10 a.m., you don't have that print. Price is still moving up and down at this level. It's until you get past 10 a.m. and then that 10 a.m. hour is printed, and then you can start measuring. So where we are right now. So let's take it back to 10 a.m. print it, and then you see the wick. Guess what happened? Got into that 50%, failed to get any higher, then boom, plunged. Okay, and can start going back up again, like we mentioned earlier, and then keep going sideways, going sideways. It got real close to the low here, but it didn't, and then keep grinding higher and higher. So the moment it gets to that level, and then it start going low, and the bodies remain above that 25%, you can take a quick scalp from maybe from here at 527, and then you can aim for the 50% of that weight to 558. It's a quick scalp, but you can do it. So, and then you keep going this way, that way, and it will retrace. So if I was trading at that level, what I would do is wait for price to drop back into 525, 530. So let's see how that play out, and then I'll try to make a long after that. Okay? See, 25, like I said, 25, 530. I would tag in and aim for 552. I'll take a partial at 552 right there, and then I will trail my stop and then try to see if we can get above here. And yeah, we got pretty good, high enough. Yeah, look how we did. And then after that, it'll just gonna keep falling down. If it fails, let's see, did it get even that out? Yep, you get to that level. So I probably would have got that one. And then after that, I will trail my stop loss all the way here. And then I'll get tagged out. And I wouldn't trust it. If I see price coming back down and I see it come back to 50%, I wouldn't trust it to go long again, because yeah, once you kind of like tag it once and then tag it again, and then by the time you get on the third time or the fourth time, you're just gonna go straight cut through it. So I wouldn't trust it to go long again on the fourth time or on the third time. So I would stay out. So yeah, so when you're trading all-time highs, and especially price is going consolidation like this is how I would deal with it. Take it on the 4 hour, on the 1 hour, and then you kind of like trail it down all the way to 15 minutes if you have to, and then try to see if you can get a quick scalp, quick in, quick out. I hope this helped. See you next time.